How close to a crypto market cycle bottom are we? Bitcoin just printed its lowest daily close since the start of its parabolic rise back in December of 2020. Ethereum has been outperforming Bitcoin, and will ETH continue to outperform BTC as we head into and after the Ethereum merge? And how do you capitalize on the situation to basically get some free money out of the merge? Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications. Now on my display right now, I have Bitcoin trading at $18,888, which is of course below the prior cycle all-time high near 20k. But if you guys have been following closely in the private community of mine, you'll know that for quite some time now, we've been trading below that prior cycle all-time high if we take into account the monetary supply. Now, back in March of 2020, when the US first issued the stimulus, of course, the US monetary supply increased dramatically as more US dollars entered circulation. And what this did was increase the volume, or increase the size of the crypto in the stock market, as people started investing this excess capital that they had into these asset classes to potentially hedge against that inflation and protect their wealth, since they didn't quite need it at the time. Now, obviously, due to recent rate hikes, the US dollar is of course gaining traction again as the US dollar gains strength against other currencies, since the inflation is being curbed to some slight extent. At least the perception of that is happening. Now, back in March of 2020, you can see we peaked here at the US dollar index, the DXY, which is of course the US dollar valued against a group of other currencies. The US dollar declined drastically in value as the stock market and the crypto market was propped up with this excess capital. But of course, when the inflation sort of like reversed, we saw the exact opposite happen. We saw the US dollar start rallying drastically up until the basically 2-decade high for the US dollar. Now, when this reverses, of course, we'll see asset classes like risk assets like Bitcoin and Ethereum rally quite hard. But are we at a top just yet? We don't quite know, since any news at this point, whether it's good or bad news, seems to be portrayed or spun in a way that it is actually good news. Now, in the private community, we've spoken about this. Of course, in September 15th, the new CPI numbers will come out. And even if they're high, they can be sort of like manipulated to seem as if they're low. So, of course, last month we had the prediction that it would be 9.1%, or at least 8.7%, because it was 9.1 the month before, and it was curbing slightly, but it came in at 8.5, which isn't really that much of a huge difference in the CPI. Now, the same thing could happen this month, and we could see the DXY rise even higher, which of course could push the crypto market down even lower. As the dollar index rises, the crypto market generally suffers in the short term, or against that, as it has an inverse correlation. Now, since we did lose this support to some extent, but we have sort of recovered it slightly, we could potentially be marking a bottom here, but it wouldn't surprise me at all if we did go much, much lower than this, since we haven't quite seen the same correction that we've seen in prior bear markets this market. Now, if we go to the prior cycle all-time high, of course, for Bitcoin, you'll see that we rallied about, or declined about 70% before having that major drop-off and dropping around 84%. Now, right now, we're probably down around 70% from the cycle all-time high. Depends on which high you look at it from, but right now we're around 72%. If we were to go down to 84%, similar to the prior cycle that we had, we would put us around the 10k region. Now, of course, there's a lot of institutional interest this time around, which we'll talk about in a second as well. It doesn't necessarily mean that the market is going to be propped up forever by these institutions trying to buy Bitcoin or hedge against inflation, but it does give us some extent that there's possible diminishing losses here in the crypto market as these institutions or larger players start buying up at these lower levels. And we've already seen that recently, even at these levels, with large chunks of Bitcoin being bought up below that $19,000 region. Now, of course, there's many macroeconomic factors here that we have to take into account that could affect this and could bring the market down drastically lower. One of those, of course, if we're looking at Bitcoin and Ethereum specifically, you can see that ETH BTC has topped out slightly here, which means that Ethereum's rally, as Ethereum has been outperforming Bitcoin recently leading up into the merge, has possibly topped out here. And the same if we look for Bitcoin dominance. Bitcoin dominance is at the lowest point it's been since May 2021, which of course was the peak of the crypto market cycle. And we've been range bound ever since then. And generally, when this reverses, as we can see the stochastic RSI and the RSI is hitting quite low here, it could possibly spark a reversal. That's the same in line with the ETH BTC here. Generally, when this reverses, we'll see a reversal in the Bitcoin dominance, meaning that there's potential that Bitcoin is forming a bottom here, or at least near to a bottom. However, altcoins and other coins like Ethereum could potentially see a lower move down, because as Bitcoin gains dominance, of course, it doesn't necessarily mean that the rest of the crypto market stays steady and that Bitcoin rises in value. It can simply mean that Bitcoin stays where it is and the rest of the market loses value. And that means that capital is going to exit the market and exit things like Ethereum and altcoins, and possibly send us lower for things like Ethereum. Of course, I've been watching this chart very, very closely. If you guys have followed me on Twitter, you'll know that I had this little hammer here knocking down from the 200-day moving average, as well as this multi-month downtrend that we've been rejected from twice here. We had a slight deviation here, and we were rejected from it here. Again, same for the RSI, high on the stochastic, we could potentially go lower here. So we could head slightly lower into the Ethereum merge, but as you guys know, I've put also a detailed explanation about the Ethereum merge in the Patreon, as to how it's a change in the fundamentals of Ethereum, or change in the fundamentals of the chain, which is a little bit different to the technical or the usual buy the rumor, sell the news event that we may see. Now, of course, this is not instantaneously going to provide more pressure or more demand for Ethereum, as obviously the deflationary change as moving from proof of work to proof of stake has to come into play as more volume or more traction takes place on the Ethereum network and more transactions take place. That would in turn spur the deflationary pressure on Ethereum and go through the triple halvening, which would make it similar to Bitcoin in terms of deflationary pressure on the currency. But if there's just no demand, there's no demand. If there's no interest in the currency, it's going to go down in value. Now, of course, if we go down further from here, it's good news for all of us if you've been following closely, because you do have a lot of capital on the sidelines ready to deploy. As you guys know, I've mentioned many, many times on this channel that DCA is not the best strategy. I don't believe in long-term DCA, buying every week or buying every month. I believe buying in large chunks, in large lump sums when the market has a red day or a major decline. Because you buy every single day DCA and your return is actually not really that good, rather than looking for those red days or buying when, of course, there is blood on the street. So I hope you guys have been paying attention to that. Now, let's take a look at what's going on in the CPI. Of course, in the next month, we could potentially see the CPI come in slightly lower than what it was last month, which technically is still not great, but it's better than before, and that would push up the dollar index higher. And we could see the crypto market go down. So it's all relying basically on the September 15th, which also just so happens to coincide with the Ethereum merge. So it could potentially be a sell the news event, just as everyone expects, and how it plays out every single time in history. With that being said, of course, also coinciding with the merge is the launch of Bloom, our luxury high sustainability fashion brand, which of course is the second phase of our nostalgia NFT project. And the reason we're launching after the merge is, of course, it coincides with the values and the ideals of the brand, and that is preservation of the environment and being sustainable. So of course, after Ethereum moves to proof of stake, it's going to become 99% more energy efficient, or at least reduce the energy consumption by 99%, which is one of the most positive things we've seen for blockchain, at least over the past 2 years. You guys would have remembered that's what topped out the crypto market back in 2021. Essentially, Elon Musk saying that he's no longer accepting Bitcoin for his Teslas because of the environmental impact that Bitcoin has, or Bitcoin mining has. And the same thing for Ethereum. Ethereum, I think it's deterred a lot of institutional investment, or institutional interest at least, away from the crypto market, because they don't want to be associated with something that is harming the environment, as it goes against their potential stock values. If they're harming the environment, it doesn't really lead to higher rises in their stock valuation. So there's a lot of positivity coming here as the Ethereum, or as the crypto markets as a whole, lead to becoming more carbon neutral, or potentially even carbon negative in the future, which we'll discuss later on in the video as well. Now, if you are a Nostalgia holder, of course, you'll get a Bloom for absolutely free. It'll get airdropped to your wallet as a Nostalgia key holder. If you haven't yet, please go check out the website bloom.xyz. I'll put a link to it in the description. We're very proud of what we've created, and this is just the beginning of like I say, a sustainable fashion brand linked to NFTs. We've got a bunch of really interesting stuff planned in terms of the tech side of things, even the generative art. We've put countless hours in making the generative art a little bit interesting. There's some very, very magical stuff happening here with layering, which we'll also discuss in depth if you haven't yet. But go check out the Discord, come chat in there, and you'll learn all about it. But if you do have some time, go check out the website. Also go check out on Twitter. If you aren't a Nostalgia key holder, you can simply go to premint.xyz/Bloom, and you could enter a raffle to potentially win one of 100 of these Bloom NFTs for free. No gas fees. The same for Nostalgia key holders. If you hold a key or you enter this raffle and win, it'll get airdropped to your wallet. No gas fees, no minting, nothing to do on your end. We're handling all of that on our end as well, since it will be on the Ethereum proof of stake chain. We're going to try to keep this as easy and positive as possible for you guys. Now, speaking of the merge is still scheduled for September 13th to 15th, and there's a way for you to potentially get some free money out of this. If you are holding Ethereum right now on a centralized exchange, you probably want to take that off of a centralized exchange and hold it in a non-custodial wallet, something like a Ledger or MetaMask or whichever wallet you use that is supporting the fork, meaning that Ethereum is going to fork into two different chains, the proof of work and the proof of stake chain. The reason being is that Ethereum miners currently aren't very happy about the shift to proof of stake, since of course they're losing a large revenue source, a large way of them making money. So what they're doing is they're forking the chain to continue mining Ethereum on the Ethereum proof of work chain to potentially make some money leading into the next year or the next 2 years, so that they can get enough Ethereum and then potentially start staking that on the Ethereum proof of stake chain and then earn some capital that way. Now, with this fork, there are a few different ways that you can make money here. If you hold Ethereum on a non-custodial wallet, you will receive both Ethereum proof of work and the proof of stake chain coins, meaning that you'll be airdropped both chains. So your assets will be duplicated. The same assets that you have on proof of work will be moved to proof of stake. Now, on the proof of work chain currently, if you look at any of the prior sort of like forks that we've had, whether it's Bitcoin SV, BSV, Bitcoin Cash, these chains generally lose value drastically against the main chain. So BSV and Bitcoin Cash have lost value against Bitcoin over the years. The same with Ethereum Classic and Ethereum. It's lost value against Ethereum over the years. I expect the same thing to happen to the ETH proof of work fork. So there's currently an IOU, and you can see it's trading for a few percent of what Ethereum is currently valued at. And I suspect after the merge, once people get airdropped these tokens, it will see a sharp selling pressure as people start exiting this. Now, if you do want this, you can of course have your crypto or your Ethereum on a centralized exchange that will support the fork and give you both coins. But if you aren't, you're going to have to remove that to your own wallet. As well as if you're providing liquidity. If you're providing liquidity on a decentralized exchange, you're going to want to withdraw that liquidity, since you won't be receiving the proof of work airdrop if you're providing liquidity. Now, with that being said, we could potentially see some heavy volatility heading into the merge as liquidity gets removed from those decentralized exchanges that people try to capitalize on receiving the airdrop, which could, of course, see a potential move up for Ethereum leading into that. But I wouldn't sort of bet on that. It's going to be a very highly speculative event. And of course, the typical buy the rumor, sell the news event might play out here, but Ethereum moving to proof of stake is a change in the fundamentals of the chain, something that we haven't really seen before, and something that doesn't really apply to news events, since there's going to be deflationary pressure on Ethereum after this. Of course, if you head to ultrasound.money, the web address, you'll be able to see how Ethereum changes from an inflationary to potentially flat or deflationary cryptocurrency, or a deflationary supply after the merge, meaning that there could potentially be some intense buy pressure on Ethereum as we have a potential supply squeeze. But if there's no environmental or macro interest in crypto at the moment, there's no retail investors, there's no institutional interest, whether it's deflationary or inflationary is not going to matter that much, and we could potentially see a further decline for Ethereum. We've highlighted some of the levels very in depth in the Patreon, so if you do want to check that out, we have very, very close on clear levels of something that we've been monitoring for the past few months, as I've outlined on this channel before. So definitely go check that out. Another thing you could do is potentially have staked Ethereum. So if you know what STETH is, it's essentially it's staked Ethereum on Lido. So you can stake Ethereum if you don't have 32 ETH. You can participate in the ETH proof of stake chain before the merge, and it currently trades below the value of Ethereum. Now, if you hold STETH, you're not necessarily going to be getting the proof of work airdrop. So people would potentially liquidate this and buy ETH leading into the merge so that they can get the airdrop. I see this potentially decreasing or declining value of staked ETH, buying it cheaply, and then eventually increasing the value as we head into, let's say, next year, or when staked ETH can eventually be withdrawn from the proof of stake contract. So there's a potential here for an arbitrage if you're willing to make a couple percent buying this once it dips and waiting a year or two once it equalizes again with the price of Ethereum. Another thing you should also keep in mind is that if you have Ethereum that is wrapped ETH, you're going to want to unwrap that, because there is obviously a potential for a DEX on the proof of work chain that will allow you to unwrap that ETH, but just do it ahead of time to save yourself some hassle if there isn't liquidity on the DEXs on the proof of work chain to unwrap that ETH that you get airdropped. So unwrap it beforehand, as well as if you have Ethereum on any of the other chains like Arbitrum, Optimism, Avalanche. If it's bridged to any of those other chains, you're not going to receive that airdrop. So you're going to potentially want to withdraw that, as I said, to a non-custodial wallet. Not your keys, not your crypto. Keep your crypto in your own hands. It's the safest way to hold on to your capital and protect it. And remember, that's the number one thing you should keep in mind, is always protect your capital. Now, I want to touch on something that I mentioned earlier in the video, which is that institutional investment isn't necessarily correlated with institutional or mass adoption. So mild institutional interest does not equal mass adoption. Now, I've mentioned mass adoption on this channel many, many times, and I've said that we aren't entering mass adoption until you use blockchain on a day-to-day basis without realizing that you're using it. The same way that you use the internet on a day-to-day basis without knowing the intricacies and the in-depth tech behind it and the protocols that you're using to use the internet. Once that happens for blockchain, that is when we reach true mass adoption. Not a few people, retail investors, and a few institutions simply speculating on the price of an asset class that mostly relies on no real-world utility, but mostly speculation, and at this point, even gambling. With an asset class that is below some of the largest valued companies in the world, an entire asset class valued less than individual companies, it is still minuscule in the grand scheme of the global financial economic system. So we are still very, very early. You are going to have another opportunity. There is going to be another bull run. It might not be soon. We are going to enter a major global recession. We are technically in a recession already. So it's going to be some time before we do see this growth, but it just means that there's more time for accumulation. As you guys know, I don't advocate for DCA long term. I don't advocate for buying daily or buying weekly. I advocate for buying on red days, buying in lump sums when the market has a huge decline, because that gives you the best risk to reward ratio in terms of making it up in the long run. If you simply DCA in, your return is going to be very, very mild, especially with the price that crypto and Ethereum is at and Bitcoin is at right now. If you are DCA'd simply every single day, you're likely in a loss right now. Had you DCA'd in the major dips, you're probably up a small percentage or possibly even break even at this point. It's very much more in your favor to buy in lump sums in large quantities when the market is red. Buy when there's blood on the streets. Remember that. So we do have, of course, some other potential negative news before we get into the bullish news. A whale spent 10,000 Bitcoin with $203 million. It actually increased to 15,000 Bitcoin a few days later. And these coins are potentially stemming from the Mt. Gox hack in 2011. Now, if you guys remember, Mt. Gox in 2011 is an exchange that got hacked and hundreds of thousands of Bitcoin was stolen from that hack. And the creditors are still are about to be made whole, at least with 140,000 Bitcoin coming back potentially onto the market. And a lot of people are saying that this could cause a market sell and crash the market. But if you don't understand this, it means that this is not actually going to happen. 140,000 Bitcoin is not going to immediately cause selling pressure on the market. The creditors of the Mt. Gox hack are going to have an option to receive their capital, whether it's in a combination of Bitcoin or cash only, 50% cash, 50% Bitcoin, and it's not going to happen all at once, meaning we won't see this major sell pressure all simultaneously on the market. It's going to be spread out over time. And I also assume the people who bought Bitcoin back in 2011 had a very strong belief in Bitcoin and understood what the tech was, and I highly doubt they'll sell it immediately as they see it on the market now once Bitcoin has become this potential for a global reserve asset, and it's grown exponentially since the time back then. I expect most people to want to receive Bitcoin and not a combination of Bitcoin and cash when they get credited with this from the hack. Now, why is this notable to keep an eye on the movement of this Bitcoin? Well, historically, any movement of over 5,000 Bitcoin from a Bitcoin OG has led to a potential decline of 20 to 80% in the crypto market or in Bitcoin following that. Meaning that since we saw 15,000 Bitcoin move recently, we could potentially see more of a 20% downward move from 19.6K, which is where that crypto was moved at. So if we do see a potential another 20% down from this, we'll probably put us at around $15,000 for Bitcoin. And if we were to go down 80%, which is actually possible, it would put us back down to 3K, which is the market cycle bottom back in March of 2020. So this is something to keep an eye on. It doesn't necessarily mean that this Bitcoin is going to be spent immediately and that's what's going to cause a crash. Remember, the chart is just a representation of people's emotions and people get scared very, very easily. So when people see large amounts of Bitcoin moving very, very, very quickly, essentially it scares them into selling it off in anticipation of the whale selling their crypto, and that is what causes the crash. It's always fear and greed, human emotions, and that's what causes the markets to move. So keep that in mind. If there is a potential move downwards, it's going to be a great buying opportunity. And I do believe we'll see some excellent entry opportunities leading up into the next year or so. And finally, we get to some positive news. Bitcoin could eventually become a zero emission network. As I mentioned earlier in the video, it is heading towards becoming carbon neutral or possibly even carbon negative sometime in the future. Now, the Bitcoin, one of the major criticisms, of course, like I said, is that Bitcoin has a huge harm on the environment. But the way they're doing this now is to potentially have some carbon negative crypto or mining, is burning excess methane gas from livestock and farming to then mine Bitcoin. Now, this puts Bitcoin currently at around 4% carbon negative, which makes it about 58% carbon neutral. So Bitcoin is technically not that harmful on the environment, and we are heading or improving the impact that it has on the environment. So in March 2021, of course, it was 41% over here, and currently we're sitting at around 58% over here. So we do have a rapid evolution of the Bitcoin network away from carbon positive energy sources towards carbon neutral and carbon negative energy sources. Currently around 1.92% of Bitcoin's network is powered by carbon negative sources, meaning that there is a positive impact for Bitcoin to some extent here. At least we're burning some of that excess methane. If you do want to read the full report on your own, I will link it in the description below. There's a lot that goes into here, and they did some interviews, and this is how they got to this number and figure out sort of like how much Bitcoin right now is carbon negative. But I think this will improve over time, and just as I mentioned with Ethereum, this could potentially spark even further institutional interest in crypto. It doesn't necessarily mean adoption, but it does mean potential interest from these larger players speculating on the markets and wanting to hedge against that inflation. With that being said, I hope you guys made it to the end of the video. If you made it all the way to the end of the video, please comment remote, and I shall see you in the next video. Bye-bye.